Very good morning, students. Today we are going to discuss the chapter Financial Statements of Not-for-Profit Organization. This is the very first chapter in class 12th accountancy. Before going to study any chapter, you should have the awareness of how much marks has been allotted by the CBSE in the board examination. You see here I have given the total marks in accountancy which you are going to write in examination, board examination is only 80 marks. Then the practical exam mark is 20 marks, that is called internal, that will be appearing in the school itself, and school itself will decide that mark. And then in the written examination, out of 80 marks, the 80 marks in written exam, this chapter that is called the Accounting for Not-for-Profit Organization has the weightage of 10 marks in the board examinations. That's why students, whatever chapter I am going to start, even if I don't say, even if I don't tell to you, you must ask how much mark will come for the board examination in this chapter. Okay, let's start the chapter. First one, what do you mean by not-for-profit organization? So you know very well that every business concern is having the profit objective. So every business is having the intention of earning profit. That's what we have studied in class 11 business studies. You know very well that. But now the organization, not-for-profit organization means the organization whose objective is not to earn profit but to serve the society or its members. It means any organizations which is having no profit motive. Like example I have given here, it may be educational institutions like schools, colleges, or a sports club, or religious organization like temple, or cultural organization promoting dance, etc., or orphanage, old age home. This you might have had in your life. So these organizations have been established not for earning profit. It is having the purpose of serving either to the society or to its members. So this is the meaning, and next we will go to the funds how are generated. You see, in every organization, without money we cannot process any activity. So without money no organization will function, that you know very well. So like that, not-for-profit organization, how it generate money. So before I am telling this, we have already studied in class 11 sole proprietor organization. The sole proprietor organization, the capital is brought in by the sole proprietor. Only one member is bringing the capital. But in case of partnership concern, all the partners are bringing. In case of a company, all the shareholder like public are buying share and they will become members, they will become owners, and they will be bringing the money. But here, in case of a not-for-profit organization, how the funds are generated, how money is coming into the organization. So it is not like a sole proprietor and other organization, it is little bit different. So the money has been collected, number one, through an entrance fee or membership fee. So whoever the member would like to join in the organization, not-for-profit organization, they are supposed to give a entrance fee. Like your students are getting admitted in the school, you have to pay the admission fee. Like that, this is called as an entrance fee. So this entrance fee is a first source which is coming to the not-for-profit organization. So number two, subscription. So every year the member has to give subscription. It may be a sports club or it may be any type of a not-for-profit organization. So any club, recreation club. So the members have to give yearly subscription. Generally yearly, they have to give the subscription. It may be a certain amount fixed by the organization. And this is the second form. And the third form, the organization is for the serving to the society, no? So when it is serving to the society, the organization may generate fund from the society itself in the form of a donation. So the people who are appreciating the services of the not-for-profit organization, they will be offering the donations. Okay, so by way of collecting the donation, the fund can be generated. Okay, the next one, the new term might not have had, or some students might have had. That's called legacy. What do you mean by legacy? Legacy means before death. Suppose a rich man, or an individual having a lot of properties, at the time of death, before his death, you assume that he is not having wife or children. So in that situation, that money he may like to give to any organization. So if a person before death is given in writing in a legal document that this money, my property, will go to the particular organization, it means after his death, that money will come automatically to the organization. That is called legacy. Okay. So next one, government grant. Government grant, if our organization keeps on performing well for the 3 years or 4 years or 5 years, and it is getting a publicity, and the government comes to know that the genuineness of our organization, the sincerity of our organization, and government itself will like to give the money in the form of grant. So every year the government may give. Once the grant is given, the government will keep giving the grant every year. That's called the government grant also. So ultimately the funds are generated in the form of entrance fee, number 1, number 2 subscription, number 3 donation, number 4 legacy, number 5 government grants. So this is the common way the fund is being generated by the not-for-profit organization. It is not like other organization like sole proprietor or partnership or cooperative societies or companies. That is a different, that we have already studied. But this organization, not-for organization, are generating funds from these 5 sources generally. And to understand this organization, like a not-for-profit organization, you should have, this is a new chapter, this type of organization. First time you are hearing this organization. That's why to understand about the not-for-profit organization, it is better you must know the characteristics of an organization. So if you understand the characteristics of an organization, it is better you will understand easily about the full dimension of the organization. So first characteristics, that's called separate legal entity. So what do you mean by separate legal entity? We have already studied in class 11 also. Even then I am recalling. Separate legal entity means law is seeing the organization as a separate entity from its promoters, from the person who have established. So the person established is different, the organization is different. That's called the separate legal entity. So it means whatever the assets the organization purchasing, all the assets it can purchase in the name of the organization. So whatever any other assets are being sold, that is also we can sell it in the name of the organization. So further, to understand, to give you a better understanding, if organization wants to file a case on any third party or outsider, it can file the case on that party in its own name. Like that, other third parties, if they want to file a case on the particular organization, they can file a case in the name of the organization. So the law is giving the status. So law is accepting that industry is wrong, that is an organization. an organization, not-for-profit organization, as a separate entity law is accepting. That is why this characteristic is called separate legal entity. Then number 2, purpose. So every organization has its own purpose. We know very well that it doesn't have the purpose of earning profit. In that case, what is the purpose of this organization? To serve the members of organization or to the society. So to serve the members mean, for example, sports club. The sports club members, they will come and do the exercises or using the gym or using the ground, and their welfare. The members will utilize the organizational infrastructure and they will get benefited. It is called the service to the members. Sometimes you take the school. School is giving service not only to a limited level, it is giving service to the whole society. So whole the society, in the particular society, whoever would like to have education, so it is providing. Like that, its purpose is to either to serve the members of the organization or to the society, to the common public. And number 3, ownership. Who is the owner of the organization? Generally, in case of a small that's called sole proprietorship organization, the owner will be the particular sole proprietor. Okay, but in case of partnership organization, the partners are the owners. In case of a company, the shareholders are the owners. But in case of a not-for-profit organization, it is not owned by any individual or group of individuals. It is generally owned by a society because it is being registered in the name of society. So society only we have to get a permission, Societies Act. That's why it is belonging to the society or trust. So at present you know that it is not belonging to any individual or group of individuals. Okay. Then number 4, profit is not the objective. That I have already told that. The title itself shows that not for profit organization. It means the organization is not having any profit motive. But practically with the organization, of course it earns profit. Even the not-for-profit organization, for example, its income is there, its expenditure is there. Its income is 10 lakh, its expenditure is 6 lakh, 4 lakh is generally considered to be a profit. But the word profit we will not use in this organization. It is strictly prohibited. You should not use the word profit. So instead of using the word profit, we should use the word surplus. We should use the word surplus. Otherwise you can say that excess of income over expenditure. Like that, if expenditure is more than an income, so we should not use the word, we should use the word as deficit instead of loss. The loss word should not come, because the profit and loss, if you are using, that will be meant for the profit making organization. But here the word profit and loss we are not supposed to use. Instead we have to use the words surplus or deficit. Understand? Next, 5th characteristics of this not-for-profit organization is management. Who are managing? Who is managing this not-for-profit organization? So you know the members are surely there in the organization. So not-for-profit organization, any club or any society, any schools, their members will be there. These members will not be directly managing the not-for-profit organization. These members will be electing the managing committee members. So certain members will be elected in the election. Election will be conducted. So they will be all the members will be casting the vote, and they will be selecting a particular member who will be managing this not-for-profit organization. Like I would like to recall the company form of organization. Of course, in fact the shareholder, there are lakhs and lakhs of shareholder will be there in the company. It is not possible for them to come and manage the company. They don't have that time. They have their own business. So that's why instead what they are doing, they are appointing the directors. You know very well. So in the annual general meeting, they are appointing the director. The same way here also, the members are electing the people, the certain particular person who is called as the management committee member. They are otherwise called as the trustees. Then the last characteristic is sixth characteristic, that's called funds, that I have already told. Once again I am repeating. That's entrance fee, subscription, donation, life membership fee, legacy, government grants. That's why this I have already told how funds are generated by the not-for-profit organization. The same thing here I have repeated. So during the discussion, if you have any doubt, I will be coming to the Zoom session, so I will be clearing all of your doubt. So you please listen to this slides one or two times. If you don't understand a particular slide, again you rewind the slide and listen to my narration, and then if you have any doubt, we will come to the Zoom interactive session. Okay, so now we have completed the characteristics of not-for-profit organization. So next one more characteristics I have left out. One more characteristics is the financial statements. Students, already we have discussed in the profit-making organization what are all the financial statement we used to prepare in class 11. That's called trading and profit and loss account and balance sheet. But here trading and profit and loss account we are not preparing. Instead we are preparing the receipt and payment account, and then the income and expenditure account, and then the balance sheet. These are the three statements we are going to learn in this chapter. So at present you understand that there are these three statements. So clearly I am going to explain about these three statements later the chapter. That's why by adding the seventh characteristics, there are total 7 characteristics we have discussed. So next we are going to discuss the organization and the profit earning organization differences. So when we are going to discuss about the not-for-profit organizations, it is better to discuss about the differences between the profit earning organization and the not-for-profit earning organization, that you can easily understand also. Anyway, I will recall once again. The first one is purpose. So very easily we can say the purpose of the profit-making organization is earning profit. It's very simple. But the purpose of not-for-profit organization is to serve the members of the organization or to serve the public or to the society. The second characteristics, sources of funds. So you very well know that. So in sole proprietorship, partnership, company, how the funds are generated, I have told many times. So how the funds are generated, you know. So that way it is generated by, it is brought by individual, or brought by group of individual, or brought by the shareholders. But it is for the profit-making organization. But in case of a not-for-profit organization, the funds are generated, you know very well, through a subscription, through donation, through legacy, etc. So already I have discussed this point in the previous slides. So number 3, financial statements. So usually we prepared in the last year, class 11th, we prepared a trading account, profit and loss account, balance sheet we prepared. That type of financial statement we prepared. But here, not for profit organization, we are not preparing the same thing. We are preparing, number 1 is called as the receipts and payment account. Number 2 is called as the income and expenditure account. Number 3, balance sheet. So regarding this 3 statements, this is the chapter we are going to discuss in detail. In the later part, you are going to do the problems also in this also. That's why just as a difference, you understand that in not-for-profit organization, these 3 statements are prepared. Number 1 is receipts and payment account. Number 2 is the income and expenditure account and balance sheet. And number 4, as I have already told you, in profit-making organization, we use the word profit or loss, but in case of not-for-profit organization, we use the word, you have to use the word surplus or deficit, either surplus or deficit, or excess of income over expenditure, or excess of expenditure over income. This is the thing. And the last difference is called as the distribution of surplus or profit. In all the profit-making organization, the profit is automatically distributed to the owner. If the individual sole proprietor would like to take the money, he can withdraw the money from the business. If partners would like to take the money, they can withdraw from the business. In company, the profit is being distributed to the shareholders in the form of dividend. But in case of a not-for-profit organization, the surplus, so-called profit, but we should not use the word profit, the surplus will never be distributed to anybody, any individual. The money, the surplus money, again it will be fully invested, invested word I should not use. The fully will be utilized again in the benefit of the members or benefit of the society regarding the purpose. Okay, so these are all the differences between the organization that's called profit earning organization and not for profit organization. Then now I have told many times that I have kept on postponing that financial statement of not for profit organization. There are 3 statements we have to prepare. Number 1 is the receipts and payment account. Number 2 is income and expenditure account. Number 3 is balance sheet. So as I told, you will be learning in later slides. Now the time has come. So it is the time to learn about each and every statement. But in today's class, we are going to discuss only the receipts and payment account. The concept of receipts and payment account only we are going to learn. So in the next class, we will discuss about the income and expenditure and the balance sheet. Okay. Now you see the students, receipts and payment account. The receipts and payment account, there are 2 sides you may be seeing in the slide, left hand side and right hand side. So left hand side is called as the receipt side, right hand side is called as the payment side. Come down, the receipt side. The receipt side is starting with the opening balance of cash and bank, and then to all capital receipts, to all revenue receipts. You see the capital receipt and revenue receipt. Here it is my duty to explain what do you mean by capital receipt, what do you mean by revenue receipt. Of course, the receipts and payment does not distinguish whether it is a capital receipt or a revenue receipt. Whatever the receipt, it will be recorded in the receipts and payment account. But even though it is recording all the receipt in the receipt side, but you have to know the difference between the capital receipt and the revenue receipt that I am going to tell bit later to you. You will be understanding, because the knowing this is very, very important. Then only you can go to the next stage called income and expenditure. To prepare the income and expenditure, this knowledge of capital receipt and revenue receipt is very, very important. It is a very simple concept only that I will explain you bit later. Then come to the payment side. Like capital receipt and capital receipt and revenue receipt, in payment side, all capital payments and all revenue payments are to be recorded, and it is ended with the closing balance of cash and bank. Okay, so this is the structure of the receipts and payment account. So as a nutshell, we can say that it is starting with the opening balance and ending with the closing balance of cash and bank. The left hand side, all capital receipt and all revenue receipt will be recorded. In payment side, all capital payments and all revenue payments will be recorded. But when okay, I have told that I will be explaining about the capital receipt and the revenue receipt. Here, the receipts and payment account, what we have seen in the previous slide, left hand side is the receipts, right hand side is the payment. It is giving the remembrance to us cash book. The cash book also, last year we prepared 2-column cash book or 3-column cash book we prepared. So left hand side is the receipt side, right hand side is the payment side. Then immediately the question should come to your mind that it is looking like a cash book only. So it means can we call it as a cash book? That question will come to you. But it is looking like a cash book, but there are some differences between the cash book and receipts and payment accounts. That I would like to say first to you. First point, the cash book, it records each transaction of receipts and payments separately. It means every day, whatever the transaction takes place, money comes in, money goes out, again money comes in, goes out. It keeps on recording every day. Also, each and every transaction it will be recorded. But receipts and payment account, which is being maintained by the not-for-profit organization, that receipts and payment account, it is a summary of cash book. It means separate cash book is already prepared. From that cash book, we make a summary. For example, subscription might have been received in the January. Subscription might have been received in the February, March. Like the different months, the members might have given the subscription. So all the subscription to be added as a summary will be recording in the receipt side of the receipts and payment account. That is the difference between the cash book and receipts and payment account. So cash book, each and every transaction is be recorded, but in the receipts and payment account, from the cash book, summary only will be taken. The summary of the cash book may be a total salary is one summary, total the subscription is a summary, total donation is one summary. So all the donation will be added, all the subscription will be added. Like that it will be added and the total amount will be recorded in the receipts and payment account. I think you are understanding this point. Okay. The second point, cash book is maintained on the day-to-day basis. Cash book is maintained in the day-to-day basis. That's why separate, there's a date column will be there. So every day, whatever the money comes, it will be recorded. Money goes, it will be recorded. But receipts and payments, it is not maintained in day-to-day basis. It is prepared at the end of the accounting year. In even not receipts and payment, not-for-profit organization prepare the cash book also. But from the cash book, the receipts and payment account will be prepared. So it is prepared only at the end of the accounting year only, not day-to-day basis. This is the main difference between this cash book and the receipts and payment account. So number 3, as the cash book is being prepared at day-to-day basis, the date column is compulsory. So transactions are recorded date-wise. But in the receipts and payment account, no date column will be there, as it is prepared only at the end of the year. So the title we will be giving very clearly, receipts and payment account for the year ended 31st March 2018. Like we prepared already in the last year, the profit and loss account or balance sheet we prepared. The same way we give the date and the title will be give. That's why no date column will be there in the receipts and payment account. Then fourth point, it has a separate column for cash and bank. You know very well, 2-column cash book we prepare. 2-column cash book, cash will be a separate column, bank will be a separate column. So I am recalling you the contra entry. If the transaction affects both, we have to make a contra entry, that you know very well. But in case of a receipts and payment account, there are no separate columns for cash and bank. These cash and banks are mixed together, and it will be recorded as an amount. So it does not distinguish whether it is money is coming in hand or money is deposited in bank. Both will be treated as a receipt. That's why no need to bifurcate, no need to distinguish cash receipt and bank receipt. It is nothing is like that. So it's very simple. All the cash and bank balances are mixed together and recorded in the receipts and payment account. Then next, 5th point. It is prepared by all organization, including not-for-profit organization. Which one? The cash book. Cash book is prepared by all organization, including the not-for-profit organization. But the receipts and payments account, it is prepared only by the not-for-profit organization. Okay, so not-for-profit organization only prepare the receipts and payment account, but cash book is prepared all the organization irrespective of its purpose. And last difference, number 6, it has a separate column for ledger folio. I think you may be recalling the cash book. In cash book, we left hand side we wrote the date column first and the particulars column, that is called receipt column, and the third column, LF column, we have written ledger folio. I think you are remembering that one. And then after that, cash column and bank column. Like that in the payment side also, date, particulars, and then the ledger folio, cash and bank we have written. But in case of a receipts and payments account, there is no column like a ledger folio column. It is not like a ledger. It is not a ledger. But cash book is so almost a ledger. That's why we use the word called ledger folio. Okay. So cash book is a ledger as well as a journal, that you know already that. That's why ledger folio was there. But this receipts and payment account, it is only a summary of all the receipts and payment. That's why there is no column for ledger folio. Next, concepts or features of receipts and payment. So I already told that we will conclude this class with the receipts and payments account only. So now the point, whatever I am going to explain, listen carefully. Even if you are missing any point, you can recall, you can rewind the slides and then learn it. This is the advantage of this session. So you see, first concept is, it is prepared on cash basis so that real account rules will be applied. You see, cash is coming under what account? It is coming under the real account. It cannot be a personal account. It cannot be coming under the nominal account. Cash is purely a real account. So real account rules is what? Debit what comes in, credit what goes out. That's why if money comes in, we have to write it in the debit side. Money goes out, we have to write it in the credit side, record it in the credit side. That's why it is prepared on cash basis. Cash basis means, listen very carefully, if cash comes and goes only, you have what in the receipts and payment. The cash, if it is actually coming, cash actually going out, only will be recorded in the receipts and payment account. So this you will understand further later slide. Then number 2, receipts and payment account, as I have already told, that it starts with the opening balance of cash and bank and ends with the closing balance of cash and bank. Here I can say that it is almost like a cash book. Cash book also we had an opening balance, cash book we had a closing balance also. The same way, the similarities are there. I cannot say that receipts and payment is totally different from the cash book. It is also almost like a cash book, but it's not a cash book. 100% it is not a cash book. But this characteristics of starting with the opening balance of cash book and ending with the closing balance of cash and bank balance. So as I already told that it does not distinguish the cash and bank balance. So it is mixed together. Opening balance of cash and bank mixed together. It will be recorded in the debit side, and credit side last carry down cash and bank together will be recorded closing balance. And number third characteristics, it records both capital and revenue nature. Students, now this is the time I have to tell about capital and revenue. I kept on postponing. You may have the curiosity to know that. It is very simple, so don't get much confused. Listen carefully. It records both capital. What do you mean by capital? We can say here capital receipt, revenue receipt. Capital payment, revenue payment. Okay. So what do you mean by capital receipt? Very simply I can say that the receipt what the organization receives, for which the benefit of the receipt the benefit will be for so many years. That is called the capital receipt. For example, we are receiving the donation for constructing the building. One good example for the capital receipt is we are receiving the donation for constructing the building. We have to keep the money till the building is completely constructed. That's why it takes many years. It may take 2 years or 3 years or 4 years, like that. So till the building construction is over, that money has to be kept. It has to be used only for the building construction. So if you receive any money like that, that's called the capital receipt. Like that, another example I will tell you for the capital receipt. Legacy. I told before death a person is giving his property to the organization, mean that money we will not be using in a particular year. So within a year we will not exhaust the money. That money we will keep and use throughout the life of the organization. So that is another example of the capital receipt. So 2 examples I have told. Number 1 is donation received for the building fund, and then the legacy we are receiving. These 2 are coming under the capital receipt. Okay, and next you come the revenue receipt. The revenue receipt means the receipt which we receive again and again regularly in every year. For example, we have deposited some money in the bank. We receive the interest. So interest will be received every year. We keep on receiving the interest. And then one example I will say, we run a sports club. Sports club means every day our members will come and they will change their dress, and they need some locker to keep their dress and the other ornaments like watch, bracelet, anything they bring, they will be keeping. So locker is very necessary for the members while they are coming for the sports club. So for that locker, the organization may collect the rent from the members. So that is called locker rent. So locker rent is the receipt we keep on collecting from the members every year or every month. We keep on collecting. So interest on the deposit, interest from bank, number 1. Number 2, the locker rent we receive from the member. These all are coming under the revenue receipt. In a simple, I can say that capital receipt means we receive very rarely. Revenue receipt means we receive recurrently again and again. This is the very simple way you can keep it. The same thing will be applicable to the payment side. Capital payment and a revenue payment. What do you mean by capital payment? Capital payment means the payment we have made for which the benefit will be distributed to so many years. A good example, we are buying a building. We are buying a furniture. Okay, we are buying a building or furniture. So the furniture and building, we will not be using this for only 1 year. We will be using for many years. That's why if you receive any money, if you spend any money from that, if you buy anything, especially the asset, buying furniture, buying building, buying equipments, in hospital we buy the equipment. All these are called as the capital payment. the payment for which we have made, that benefit we will be enjoying for many years. That's called the capital payment. Like that, revenue payment. Revenue payment means it's the opposite to the capital payment. Revenue payment means the payment which the organization incurs every day-to-day life. Like salary we have to give to the workers. So we have to keep on giving salary every month. So like that. So that's called the revenue payment. Like that, rent we have to pay, taxes we have to pay. So these are the regularly paying amount is called as the revenue payment. Okay. But here you understood the difference between the capital receipt and the revenue receipt, and the capital payment and revenue payment. Okay. But in the receipts and payment, left hand side in receipt, it records all capital receipt and capital payment. In payment side, it records all capital payment and revenue payment. That's why in receipts and payment, no need to distinguish this. Just by closing the eyes, you can record all the receipt in the receipt side, all the payment in the payment side. No need to do any research whether it is a capital receipt or revenue or capital. No need to get confused. But why, sir, you are telling this much differences? But why I am telling is, while you are preparing the income and expenditure, this concept you must know. That's why I have told right now. Okay. Then the fourth point, the receipts and payment. It records all cash and bank transaction, whether it relates to current year or previous year or next accounting year. Listen very carefully. Suppose a member is giving subscription. This year is 2018, 2017, April 2017 to March 2018. This is the current year. So 17-18 is the current year. So a subscription, a member may pay the subscription for 17-18. We have to record or not? Yes, we have to record it the receipt side of the receipts and payment account. But the same member, last year subscription, he failed to pay. He might have a defaulter, failed to pay. So last year subscription, if he pays, that subscription belongs to last year, even though the subscription belongs to last year, but he is paying when now he is paying. But it has to be recorded or not? Yes, it has to be recorded. That's why receipts and payment is a blind like. It is not distinguishing this money is for the last year, this money is for the current year, this money is for the next year. Next year means sometimes a person having excess money, he may like to pay the subscription for the next year also. So next year subscription, Mr. X would like to pay this year. So that money should be recorded in the receipts and payment account or not? The answer is yes. So the subscription may be for the last year, the subscription may be for the current year, the subscription may be for the next year. So all the money has to be recorded in the receipts and payment account receipt side. The same way the payment may be related to previous year, the payment may be related to current year, the payment may be related to next year. That you don't worry. All the money, if you pay this year, the organization pays this year, it has to be recorded. That is why, irrespective of the year, whatever the year may be, all the money has to be recorded. That's why you read once again the fourth point. It records all cash and bank transactions, whether it relates to current year or previous year or next accounting period. Now you can understand better, students. Okay. Then number 5. In profit and loss account, we used to do the adjustment. The financial statement with adjustment or without adjustment we studied. With adjustment, I want to recall that outstanding expenses and then the accrued income, depreciation. These are the adjustment we did. I think you may be remembering. But here you be very careful. You see that 5th point. Adjustment like outstanding expense, prepaid expenses, accrued income and depreciation are not made in this account as it is prepared on cash basis. Students, this is a very important point. outstanding expenses mean what? The money, salary means is an expense. Salary 10,000 I have paid to my worker. The worker I have appointed or manager I have appointed, I have given 10,000 to him. But 2,000 salary still I have to pay. So here 10,000 is the salary I have paid, 2,000 salary I have to pay. So, but actual amount I have paid is 10,000. The 2,000 is called as the outstanding expenses, outstanding salary. Now I am asking a question to you. This salary paid 10,000, you should record it in the receipts and payment account or not? The answer is yes, we have to record it because money has gone out, cash basis, so cash is recorded. We have to, cash is going out, we have to record. But the outstanding expenses which we have to pay, should we record or not? Answer is no. You should not record the outstanding expenses because this you have not paid this year. So as you have not paid this year, this will not have any role in the receipts and payment account. Like that, any receipt, like the receipt, it may be for the previous year or current year, that I have told, sorry. Here adjustment like outstanding expenses I have told. Prepaid expenses like insurance premium. Insurance premium, sometimes we may pay the insurance premium next year premium in the current year. So if you pay next year premium in the current year, we have to record. Actually this year premium is 10,000. Next year premium is 2,000. Next year premium is 10,000, you assume. So 10 plus 10, 20. 20 we have to record it or not mean? Yes, we have to record because we are not doing any adjustments. The money paid means we have to record it. Money received means we have to record it. That's why we should not do any adjustments like outstanding expense, prepaid expense. Accrued income means the income which we have to receive. We would have received the income 20,000, but still we have to receive the income 5,000. The 5,000, unless and until you receive it, you should not record it. That's why that accrued income, this and all will not take place in the income and expenditure account. And also the next item is called depreciation. Depreciation is already we discussed. You know that if you provide depreciation, our money is not going out. Or we buy the machinery for 1 lakh, depreciation is 10,000. We record depreciation. Already in P&L account we recorded the depreciation. But are you giving money to anybody? No. If you give salary, money is going out. If you give rent, rent is going out. But if you provide depreciation, the money is not going outside. The money is within the business only. So this is simply, I can say, this is called as a non-cash item. It means the transaction which is not resulting any outflow of cash. Cash is not going out. That is why as the money is not going out, this will not be coming as an item in the receipts and payment account. That's why number 1, outstanding expense, prepaid expense, accrued income, depreciation are not made in this account as it is prepared on cash basis. Okay, so these are the things we have discussed, students, today. This class is over now. By reading, when you are reading the slides and listening to my narration, of course the doubt may arise. So how the doubts will be clarified, I will be telling you in WhatsApp. I will be telling very clearly. For that, one platform is there, that's called a Zoom app is there. The Zoom app, if you install in your mobile, we will be meeting, have a time we will fix. All will be joining in the meeting. In the meeting, you can easily discuss these points, whatever I have discussed today's class, whatever you have not understood, if any ambiguity from my side or your understanding level, if you don't get any point, anything. So if it is any problem, you please ask in the interactive session so that you will be getting complete understanding to you. Thank you, student. Thank you very much.